Hello. Hey. Mortgage rates went up again this week, but here's the strange part. Buyers may actually have more leverage. And how can both be true? Welcome to the What's Up in Real Estate, where we turn housing headlines into a plan and not a pitch. And if you're finding us for the first time on TikTok, welcome. You picked an interesting week to join us because underneath those mortgage rates, something else is changing. The job market is slowing, sellers are adjusting, and the balance of power between buyers and sellers are shifting. And stay with me. We're going to figure out who holds stronger hand right now, and I'll give you 5 steps to that can keep a good real estate deal together before they get to the closing table. And you know what? Hey, this market is complicated. I don't have my glasses on, and your plan doesn't have to be a pitch. And talking point number one, rates. Rates are higher than last year. And if your 2026 plan assumed failing mortgage rates, well, it's time to update that plan. And helping me make sense of all of this is my illustrious co-host, Sol, our resident artificial intelligence economic analyst, occasional philosopher, and sometimes aspiring comedian. Sol.
Hey, Mac. I've checked the numbers, double checked the forecasts, and I've prepared the jokes. Statistically speaking, 2 out of 3 of those will go reasonably well.
Yeah, I'll take those odds. And so, Freddie Mac's August 6th survey put the average 30-year fixed at 6.69. That's just above 6.63 1 year ago. It is significantly higher than February's low before the war. More applications fell also. Total applications fell 2.9%. Purchases fell 4%, refinance applications fell 2%. So, why did rates move higher? Well, energy is part of the story. Oil prices jumped after what? If we hear bombs, we know that rates are going up. And military action disrupted traffic through the Strait of Hormuz. Higher energy prices increase inflation. Inflation risk bond yields moving higher. And mortgage rates responded with much more closely to long-term bond yields and inflation expectations than they did to the most recent Federal Reserve's decision not to raise rates. On July 29th, the Fed held rates at 3.5 to 3.75%, but 3 voters wanted to raise rates. And today's weaker job market numbers pull in the opposite direction. So it is truly a tug of war. So
Waiting for the Fed to cut doesn't guarantee a better mortgage rate. The better question is whether today's payment, house, and timeline work for you. If rates improve later, you can refinance.
always, always. And here in Houston, June's closed median price held at 345. That's 345,000 with 5.2 months of inventory. You know what? For buyers in Houston, that creates negotiating room. So qualify at today's rate, compare seller credits against price reduction, and make a decision based upon your budget, not somebody's interest rate prediction. Here's my question for you. Would you rather have 10,000 off the price or 10,000 towards your closing costs? But price or payment in the comments, please. And right now, the economy feels like a family road trip. Oil is driving, inflation is yelling direction, the Fed keeps threatening to turn the car around, and housing is in the back seat saying, "Are we there yet?" And we're not. Talking point number two, not a strong jobs market at all. This is not a collapse, but hey, it's a cautious household signal. ADP says private employers added just 44,000 jobs in July. That's down from 95 in June and 122,000 in May. And this week, the Bureau of Labor Statistics gave us another warning. Total non-farm payrolls fell by 23,000 jobs in July. Unemployment, though, held at 4.1%. I guess the more people are getting out of the housing market and have given up. But May and June were also revised down by another 103,000 jobs. Different surveys, but the same message. Hiring has slowed sharply. Now, slower hiring can eventually help mortgage rates, but that doesn't matter if you don't have a job. So,
A softer job market may help rates over time, but job stability comes before house timing.
exactly. Buyers need honest budgets and strong reserves. Sellers should expect more payment sensitive buyers, and agents, well, need solid pre approvals, not wishful thinking, and not just pre qualification letters. Houston remains somewhat different. Preliminary June payrolls were up 1.1% year over year. Construction employment rose 5.9%. Financial activities fell 1.4. So, in Houston, the industry you're in really matters. And if you're buying a house, don't open new debt. Don't make unexplained money transfers. And please don't change jobs. And one more question: how many months of housing expenses would make you feel financially secure? 3 months? 6 months? 12 months? So, home value isn't created only when a house sells, it's created every day in the community you live in. HOA Share brings community management, vetted vendors, homeowner cashback into one platform. And now for a message from this week's sponsor.
Tired of home service hassles? Introducing HOA Share, your trusted partner for local services. The only HOA platform that pays you back. Earn cash back on every service, tracked in real time. Easily manage payments, all in one place. From plumbing to home cleaning and more, HOA Share connects you to trusted service providers. Connect, buy and sell, get notified, and more. HOA Share, your HOA finally worth something.
Hey, thank you, HOA Share. And for this week's talking point number 3, home prices are holding, which could be good news for buyers. And price headline that sounds much scarier than it really is. Realtor.com says July median listings price was $428,950. That's down 2.4% from last year. But remember, those are just asking prices, not completed sales prices. Prices per square foot, however, fell 2% nationally, and it fell in 34 of the 50 largest metropolitan areas. But real estate is truly local. Price per square foot actually increased in the Midwest and the Northwest while falling in the South and the West. So, buyers, yeah, you may have more negotiating room. Sellers, price from today's comparable sales, not your COVID memory. And homeowners, lower
Mhm.
asking prices does not necessarily mean your equity has disappeared. So,
Mhm. The national housing market is a weather map, and your house is a street address. Exactly. And Houston proves that point. July's median asking price was 360,000, down 2.7%. Price per square foot fell 2.1%, and yet June's closed median price held at 345,000. Sales increased, and that's not a frozen market. That's a price sensitive market. Buyers negotiate with evidence. Sellers win those first 2 weeks with accurate pricing. Agents, tell me what you're seeing. Are realistically priced homes moving faster today in your market? And for our new segment, market confidence check. Enough headlines. Who even has the advantage? So here's the report card. First
yeah.
time buyers, 6 out of 10. Lower asking prices help, but rates and employment uncertainty demand a strong budget. Move up buyers, 7 out of 10. Equity plus negotiating leverage can be powerful, but 2 transactions requires planning.
Yeah.
Investors, 5 out of 10. Better price leverage. Expensive financing. The cash flow needs to work without assuming magical appreciation, right? And sellers, 6 out of 10. Demand still exists, but 20% of national listings took a price cut in July. Which score would you change?
Yeah. Thank you
And
for that, Soul. And hey, I appreciate
yeah,
you taking over the co-host duties for me today. Now let's move on to the next
happy
segment.
to.
So, mortgage and money strategy, 5 steps for a smooth closing. And hey, closing rarely gets messy because the dream was wrong. They get messy because one little detail waited until the last minute. So, here are 5 steps toward a smoother closing. Step 1, read your closing disclosure. Here at Rate, we send you a closing disclosure generally well in advance. It's called an initial closing disclosure. It is not going to be balanced between us and the title company yet, but it is a document that should be reviewed for clarity and mistakes. Check the loan amount, check the rate, check the payment, check the credits, closing costs, cash to close, and if something is has changed, ask why. Step 2, secure your closing funds. Confirm whether you need a wire or a cashier's check. And before wiring money, always call the title company using a trusted phone number, not a phone number from an unexpected email or an unexpected text message. Scammers love urgency. Step 3, respond quickly. Watch your email, answer your phone, have your identification and insurance, financial, and signature ready. And again, no new credit, no mysterious money movement, no surprise career changes. Step 4, match your legal name. Loan application, bank account, identification, purchase contract, title documents, loan documents, make them consistent. And finally, step 5, confirm the logistics. Final walkthrough, closing appointment, HOA requirements, insurance, traffic, and even the weather. Closing day is not the day to discover something everybody could have handled on Tuesday. Here's a real world example. A Sugarland buyer noticing a missing seller credit on the closing disclosure because they reviewed it immediately, not while sitting at the title company lobby. We still had time to fix it and without delay. And that's the value of preparation. Our strategy is we call 72-hour closing command center. One document folder, one contact sheet, one verified funding call, one final review with yours truly, because we believe in educate, empower, execute, and hopefully you'll have a meeting experience with us and our team. And if you're within 60 days of making a move, message me at Team Mortgage Mac, and we'll help you map out a mortgage plan and a mortgage closing plan, not a pitch. Thank you. Yeah, thanks, Soul. All right. So for this week's Stoic quote, Epictetus wrote, if you want to improve, be content to be thought foolish and stupid with regards to external things. And you know what? I might be somewhat foolish, maybe not stupid, but hey, hopefully we're live on TikTok today. So if you're watching us on TikTok, please give us a wave, please give us a like. And hey, the real lesson is not to reject experience or expertise. It's to release the ego that comes from learning. In money and real estate, one of the most expensive questions can be the one you never ask. Preparation often looks humble before it looks intelligent. So here's this week's reflection. What question are you avoiding because you think you should already know the answer? Ask it. Ask it before the decision asks you. Now, enough for wisdom. Let's jump into this week's puns. And Saul, now you can take over.
Thanks. I finally figured out why mortgage rates and home prices can't agree on anything. They're in a long-term relationship, but neither is willing to commit. That concludes today's economic analysis.
Thank you for that, Saul. Hey, thanks for joining us today. And thanks to Rate, List Reports, and HOA Share. If today helped you better understand this market, follow, subscribe, and share. And if you're joining us here on TikTok for the first time, thank you. Please be nice and please give us a like and or a comment of what you believe you would like to hear and what we could do better to inform you about how to be a successful home buyer in this challenging market. And come back next Saturday at 10 a.m. Next week, we'll break down July inflation and what it could mean for mortgage rates this fall. And if you want to understand your numbers, connect with yours truly at #MortgageMack, #TeamMortgageMack on Google. We'll give you a plan, not a pitch. And until next week, stay informed, stay engaged, and I'll see you at closing.
Late nights, early mornings, he stays on the grind. Looking past the rate sheet for the value you'll find. Every signature means more than the doc you just